Hey guys, Kunal here, Bulls on Wall Street. Guys, this is a fantastic time to talk about something that's so important that all of you guys need to utilize right now. How the heck do we find the best stocks to day trade? As a teacher who's taught thousands of students all over the world since 2008, one of the things that I've noticed with so many of my students, especially in a hot market like the one we're in right now, is picking the right stocks to trade. So many students and just so many traders, they go through some scans and they put together some decent looking kind of trending stocks and they draw squiggly lines on them and they're hoping for explosion. But that is not what real traders do to maximize profits. That word, maximize profits, is so important because as retail traders, we are limited in the amount of capital that we have to utilize in our stock. So we have to trade the best names on any given day. So how do we do that? What are the parameters that we need to see for something to be explosive versus, hey, I'm using some technical analysis and the stock goes up 1%, 2%, 3%. And that's what a lot of traders do. They'll take something simple like a little flag pattern or a little flat top breakout, and then they have these big city dreams about it, but that is not what causes explosion. So let's talk about this. What is the perfect storm that will cause a stock to explode? That is marrying technical analysis with fundamental analysis. That's the true holy grail. When you use technical analysis, a stock can go up a little bit that day. It'll probably reach its ATR, its average true range, and then it'll fiddle around for the rest of the day. But for a stock to go above and beyond what it normally does, you need some type of fundamental catalyst. And you have to marry it though with a technical level and a technical pattern. And when you do that, you have the perfect storm of stocks. So let's take a look at some of the best trades I've seen and done in the last few weeks that follow this thesis. So let's take a look right now on Friday. So Friday was a hot day in the markets, but there were a handful of things that are happening in the markets that cause it to be like that. So right now we're in earnings season. Earnings season is something that comes along 4 times a year where a stock is going to announce its earnings, its future plans, and everything else it has going for it that can cause stocks to make explosive movements. So best example I've seen of something like this is a stock that we've traded day in and day out for over a year, is SMCI. So SMCI had been just sitting down at some support Friday morning, and they announced their earnings a little bit early and said that they were going to be gangbusters. So that stock gaps up to around 340 right into the morning. It has an opening dip right into that level. So it had been just sitting around, dips off at the open to about 340, and then you see this explosion. And what you can see based on the daily chart is that 360, 365 zone is like this huge, big base breakout. It had been sitting in this base for months and months. So now what we have is this fundamental catalyst where they're beating on their earnings by a lot. You have this awesome gap that goes right through it. So when you break those levels, even though this is a $350 stock, the stock moves almost 100 points that day. Look at the intraday action on this. You start at 340 and you run straight to 420 because you are marrying a fundamental catalyst, but also you are marrying it with a technical breakout. And then here's the kicker. Look at the float on SMCI. It's sitting at 50 million shares. So even though it's a large cap company, when you announce an earnings surprise and you have technical levels with no level of supply on top, the sky's the limit. some of the call options, I tend to trade options on these kind of names, they're up 1,000%, 2,000%. Some of the strike prices in the 400s were up over 10,000% just for the day. Now, you can't ever predict that something is gonna go so crazy, but there is a formula to this. You have the technical level, the fundamental catalyst, you have the low float, and then you also have a huge sector momentum that's been happening in these names, and that's your semiconductor index. If you look at AMD, you look at NVIDIA, every semiconductor has been rolling. We're going into this huge parabolic push into it. So when you announce the earnings on something like this, you have the perfect storm for a big squeeze. Another example, when we're looking at these kind of names, look at NVIDIA when it broke 500. So NVIDIA had been sitting there under that 503 level for months, and it tested it and tested it and tested it, and it frankly had been looking like it was going into a little bit of distribution while it had been sitting in that base. Then one day, NVIDIA announces that their chips are ready to sell to China. So they had a ban. The US government said, hey, they can't sell certain types of chips in China. So they reconfigured their chips to make them readily available to sell to the Chinese population. That small catalyst sat there and gapped the stock up, and that broke it through the 500 and sent it along its way into 594 over the course of a couple weeks. How does it drag on such a small piece of news for so long? Well, when you're coupling a fundamental catalyst that can shove it over the level, and then you have no level of supply on top of it, no level of shares or supply that's gonna rain down because you have no resistance levels. Now you have a stock that can just keep grinding and grinding and grinding all the way to the big bucks. Let's take a look at a third example. A few days ago, this AMD had been sitting under that 150 level for a week or so, and it just kind of been testing that level, and lo and behold, a few days ago, AMD gets a big upgrade, and so now you got a fundamental catalyst in a hot market in the right sector. An upgrade can be a nice catalyst that can send a stock over technical levels. And now once you've breached that technical level, you get that huge explosion where you're hitting 170, 172 in just a matter of days. Guys, this is not some small cap stock. It's a big, thick, heavy float stock. But that small upgrade, when you couple it with a technical level, can cause explosions. So many traders get stuck in the weeds. They start trading stocks that are stuck inside ranges. They start trading stocks that have levels of supply on top. They start drawing squiggly lines, diagonals, and what's usually happening is you're just kind of tilting your head, looking for reasons why a stock may be a buy instead of really thinking fundamentals plus technical levels. When you're in the clear and you have nothing on top, that's when a stock can really explode. Biggest advice I can give you is stay out of the weeds. Stay out of those low-level setups. Stocks stuck in range. Stocks stuck near lows. Stocks that are cheap. And look for the clear patterns with no levels above, along with fundamental catalysts, and you're going to be making money in this 2024 bull market. Guys, let me know what you think. Feel free to leave me any comments, and of course, smash that like button if you like what we're doing.